Today we're going to answer the 13 most common questions for home and auto insurance. The first question a lot of people ask is what coverage is available? So if we're talking about auto, there's the pieces of liability, there's the full coverage word that everybody doesn't know is made up, but it's a piece and we'll talk about it. And then for the home, there's just the liability of the home and the actual protection of the home itself. Now, there's a ton of pieces that cover that, and I'll probably link some videos in the descriptions below for some of this that want to get more detailed with that. But essentially, the coverage is a wide range. For those that want more than that, the biggest piece is the liability, not necessarily the asset. So the asset is the car or the house. Yes, they're going to do what's called actual cash value on the car 99.9% of the time. That just means the value of the car deteriorates over time or if the value goes up. So it's worth whatever the car is worth at the moment. For the house, they estimate the build of a house, how much it would cost to reconstruct the house, and sometimes they include demolishing the home. So if they had to rip it all down, there's an extra $30,000 mixed in that, and then the house would be whatever it costs to rebuild. Now there's all of the little things like what if someone stole your laptop out of your car? Or what if a pipe burst in the house? What if there was a fire or a theft and things like that? And it gets a little bit more detailed. I'll put a link to a video in the end of this that goes over more of the 101s about home and auto insurance. The second common question is what is the difference between liability, comprehensive, and collision? They're very different, and they all come together if you order them. They're essentially what they call full coverage. That is the three pieces that make up the assumed word full coverage. Now, liability is injuries to others, so what you're liable for. If you damage their car, if you hurt somebody, it usually pays the medical or the property damage. The comprehensive is covering your car for theft, vandalism, if you hit a deer, animal, acts of God, basically things like that. And then the collision is covering your car in the event of an accident. If you hit a house, you hit a car, whatever that case is, or someone hit you, you've got full coverage on everything. That's the full. Now the limits that you pick are what differentiate the difference between the levels. So when you say full coverage, you're essentially adding those pieces, but it doesn't include towing and road service or rental car or having better liability limits versus having the state minimums. And that's where it gets a little bit more detailed as far as the coverages that you need. Like I said, again, at the end of the video or in this video, we'll go over some of the limits that we suggest, and then we'll talk about some of the specifics if you're looking more about the car insurance. Another great question is what is the difference between ACV, actual cash value, and replacement cost? So it's very uncommon that an insurance company will even do replacement cost, but there's two options. So actual cash value is the value of the vehicle at the time. Any object. It could be a house, it could be a pen that you own. Whatever that pen is worth today is what the insurance is covering. The full replacement cost is what does it cost to replace the vehicle? So the value of a used car that's 5 years old might be $5,000 less than you paid for it. But the value to replace the car might be $5,000 more to buy it again. Those are the big differences between the two. Now, commonly the full replacement cost is on those sub-items or classic vehicles. And when I say sub-items, we're talking about a boat, a motorcycle, a trailer, things like that. You can usually put full replacement cost on those versus actual cash value. And yes, the price will change based on the cost that you think it's worth versus what it is. Now, you can't go crazy and just put $10,000 more value on a replacement cost because there is a limit to where it has to get approved beyond a certain number. Similar to the car insurance, the home also has what's called the replacement cost, and that's essentially the replacement of the home. Typically, a home insurance policy will give additional replacement cost. So if there was a total loss and let's say inflation hit and the cost of lumber cost 10-20% more than what the house was worth, now you're stuck with the bill, right? No, most of the times these companies will give you additional replacement cost in the percentage base. So 25% more, 50% more, or 100%, no matter what it is, they're just going to cover whatever the repair is. The fourth question is how are rates determined? And let's look at the auto first. It's really simple to understand, even though there's a ton of factors. It's essentially the main pieces of what I call a profile. Each person is different fits for each company. That's why your neighbor might get a better price than you do, because they have a different profile and your location may be different. So the main things that most states rate, a lot of them do and don't do gender. It's kind of a 50-50 depending on the state you're in. Most of them say credit is not a factor, but they use what's called an insurance score, which in all honesty is a version of credit. I have a video on my channel if you want that goes a lot more in depth and talks about the 5 pieces that make up that score. But essentially it's your claims history and your credit history and all of that mixed into a package, and that plays a big impact. Location is a very large impact on your car insurance because that is the risk profile, right? How many people are driving or how many accidents for that company are in that place. That's why shopping for car insurance is very difficult because you don't know which company you're a good fit for. If you are shopping around for car insurance, your best bet is to deal with more of an independent agent because they shop 5, 6, 10, or 15 different companies all at once. That gives them an idea when you plug in the coverages that you want, who's going to have the best pricing based on the profile that you are. If that's the case, I'll put a link in the description below. You guys can fill out a quote and I'll link you up or try to link you up with somebody that does do insurance in your local area. Some states I actually have a company that we work with, so you may get a call from me or even my partner. For the home, it's a little bit different. The home is really just the location because it doesn't physically move. The risk is a lot lower on a home, but one of the larger pieces that they factor in is the condition of the home, any maintenance issues that they've had. If there has been a foreclosure on the home, so there's likely some damage that might have happened. Have they had any claims on the home? Those are big things. Obviously for auto as well, the claims matter, but the home is really focused on those main pieces. Does insurance score play a small factor? Sure. The number of people that live in the house, kind of, not really as much anymore. The overall risk profile of that, and then the reconstruction cost. Their biggest thing that they worry about is somebody buying a super cheap home, but it's worth a whole bunch more to replace, so there's high risk of fraud there, and they want to be careful on that scenario too. 5, what discounts are available? I'm not going to go too far in depth. I'll go with some major ones, and then I will promise I will link a video that goes over discounts at the end of this. So for the auto, the main discounts is bundling. Same thing for the home. Also for the auto is having longevity. If you've been with a company for 5 years or more, it can be 3, but 5 is the max in most cases. Most companies will give you a big discount. In states that are no-fault states, or not no-fault states, let's say, your liability plays a huge risk. Where the states that have no fault and you have to carry certain medical coverages already have some of that liability built in. So if you're in one of those states that is an at-fault state, it helps that you have higher liability limits when you shop around, because having those higher liability limits give you a better price going forward. Claims free is an uncontrollable discount because if you haven't had any claims, you get a discount. Most companies give a major discount for that. Shopping in advance, that also can help you if you're 20 days or more. Most companies go 7, but there are a few that go a little bit further. For the home, the biggest discount is updates on the home. So if it's an older home, newer roof, newer electrical, newer plumbing, new heating. All of those play a factor in the price of the home. The purchase date can help you if there are claims, because some companies don't rate claims that weren't yours against you. There are a few that do, so it is unfortunate, but once again, that means that company's not necessarily fit for you and that home at that location. 6, how much coverage do I need? It's a very difficult question, but I'll be honest, most of the time, agents will quote you a similar coverage because they do it all day long. My common and my default is liability for car insurance is $250,000 per person, $500,000 per accident. That way, if you hurt one person, you've got quite a bit of medical. If you injure multiple people, it's less likely you're going to get sued unless you have a lot of income. The property damage, I like to carry at least $100,000. That way, if you damage a nice BMW or a nice vehicle, then you're going to have at least some or most of the coverage, if not all of the coverage that you would typically need. Uninsured and underinsured motorists, those are pieces I always add on that just protects you. Any medical that you can give back to yourself. And then if you have a newer vehicle, full coverage. The deductible, I try to go as low as possible without going over the price that we want to be at. That's a quick snapshot of it. In the 101, we go a little bit further in depth in that as well. For the home, there's just pieces I would always add on. So you've got the actual dwelling. That's actually going to be created by that insurance company. Each company has an estimate of a cost per square foot. So however many square feet you have above ground, they're going to calculate that based off how much it costs to rebuild. Typically, it's $180 to $200 per square foot, unless you have a lot of updates or upgrades to the home. The pieces that a lot of people don't realize on the home is you want to have a couple things. You want to have water backup. That's not typically covered if water comes back into the house. Toilet overflows, sink overflows, something gets clogged. You want to have some coverage there. I default to $10,000, and then I recommend more if you can afford it. The medical payments is automatic, but a lot of companies default to $1,000. If somebody gets hurt in your home, so now because deductibles are higher, Having 5,000 is probably more common. It's not a very expensive thing to add, so it's a good piece to have. The other main piece that I personally make sure that everybody gets is full replacement cost on contents. So we want to have and make sure that your personal belongings don't lose value over time. Imagine if you had a fire and all of your stuff went up in smoke. You might have had a 10-year-old couch, but are you going to go bargain shop for a 10-year-old couch and everything that you own? No, it doesn't make sense. So you're going to get a lower amount for your personal belongings. You might as well have full replacement cost so that you don't have to worry about it. They're going to give you whatever the full value of that couch purchased today. So the $3,000 couch you bought 5 years, 10 years ago might be worth $200 today on a used garage sale, but to buy it again is $4,000 to buy. You get the $4,000 so that you don't have to worry about going bargain shopping. Now, adding all of these pieces do create some larger cost, but in the home, I would rather have you have a larger deductible. I default to $1,000, but we can go up to $1,500, $2,500, whatever the case is that fits your budget. So that way, I'd rather you out of pocket some extra money versus not having enough coverage. Not having enough coverage is 10 times worse than having to pay a few dollars more if there's a claim. Number 7, what is the process of filing an insurance claim? It's actually very simple. So if you have a claim, here's what I recommend, and I'll tell you here's what you should do. So I recommend that you talk to your agent first. If it's a major claim, skip this step. If it's something minor and you're not quite sure if it's worth it, talk to your agent or go to a body shop, get an estimate, find out what the repair would cost. Make sure that you always get the license of the person. If it's something where you're kind of questionable, it would always be good to have a police report in either scenario. I've seen so many people scammed because they give you fake ID or they didn't give you their insurance information or they didn't have any. Now there's no proof that it was or wasn't your fault in the scenario of what happens. Now the police don't always determine the fault, but it gives you a good leg to stand on, especially if they're the one that didn't cause the accident. If that repair is within reason, you may want to just fix it yourself and not worry about the rate increase depending on the state you're in. If it's a major claim, then just go straight to the claims adjuster. When you look at your paperwork, usually on your ID card, it'll actually have a claims number. If you have towing, call the towing company, get that all set up, whatever the case is. But you call a claims number, they're going to ask you the situation, calm down, get your head on, let's figure this out. Don't just call them up and be like, this just happened, and so you're freaking out, and then you just start blabbing, because whatever it is, imagine you're being interviewed. This is almost like the first response that you're going to say. If you say things incorrectly, then you don't want to be held liable for those pieces if that wasn't the scenario. Get a cool head, figure out the situation. If you have a police report to back it up, that's even more powerful. Call the claims adjuster. Make sure that you get specific time frames. Adjusters can take a few weeks to get everything finalized, so make sure that they're letting you know what time frame you can expect or call back, whether you can have the car in the shop right away, how long it's going to take to get the car fixed. If you have rental car coverage, then you may also want to know about that too, so that you can get a rental car while you're waiting. Very similar scenario on the home. The unfortunate piece of the home insurance is that it is a little bit riskier because there is no fault 9 times out of 10. If you have a claim, it goes against the house. And the house is what you're insuring, so your price goes up no matter what. If that happens, then you want to be mindful of, is it worth filing a claim? If you do decide to file a claim, talk to your agent, get the advice. Same thing, you call up the adjuster and they send someone out to inspect it. Most of the time, if it's just a common issue and you're not going over the moon asking a ton of different questions, then they're not necessarily going to pull up red flags. Usually it's simple and easy to go through that process depending on the company you went with. But as long as they're not pulling up red flags, now no one has to inspect everything. If that's the case, it's cut and dry and it's a simple process. I believe we're on question number 9. What is the insurance company's financial stability? So this is very simple. There's something called AM Best, and they rank companies based on the financial stability. That's essentially how much money and assets they have. They break them up into 2 pieces because insurance companies have to have X amount of money in the savings account or in the bank so that if they do have claims coming in all over, they can pay those. That's one of the things we saw recently, like in Florida, where these companies went insolvent. That means they ran out of money and there was too many claims. The government had to step in and they went bankrupt. So there's 6, 7, I think even almost 9 companies that went bankrupt in Florida because of all of the claims they didn't plan on. So insurance companies are investing that money, so they want to take as much as they can, put it in investments, grow the stock, grow the portfolio, buy everything they can on a low risk level, and that's how they make their profits. They have to have a certain amount of investments. So this AM Best, you can go right to the website, I think it's ambest.com, the stability of the company. Most of the companies, at least the ones I've worked with and the ones we talk about a lot, are A rated or A plus rated. It's as simple as that. It looks like a grade report, A, B, C, D, and they have pluses and plus pluses. The plus plus is the max, and that means they're the most stable thing you can think of. However, that doesn't mean that they're necessarily going to pay claims. They could have a high stability, but they could be one of the worst companies for paying claims because they're stingent with the claim process and the money going out. Just be careful when that happens that AM Best ratings don't necessarily say how good a company is. It's the customer retention. There's actually a study done on several companies that is more based on the customer's interactions and the overall satisfaction. To me, that's more powerful, but obviously we want to make sure that we're not dealing with B and C rated companies because they are very unstable. It leads to question number 10, which is, what is customer service like? Each company is completely different in this scenario. What it should be like is very helpful. The small issue that we've run into in 2022, going into 2023, and so on and so forth, is that customer service has gone down considerably. Part of the reason is the prices have gone up, so there's a lot more questions, a lot more service needed. The other issue is there's a lot more medical claims being paid out in the last 2 years than there ever has been. There's been more accidents, so there's a lot more busyness. On top of that, everybody is on delay. So getting the right parts, getting the right metals and all of that, getting things fixed is taking almost twice as long, and that's creating some issues with service. Unfortunately, your larger box companies, if they get overwhelmed, they're going to be slower. They can afford to lose the customers based on satisfaction. Now, that's not the reasoning they want to do it, but unfortunately, they haven't been able to get to them because they don't have enough resources to get the claims pushed through. That's one of the downfalls of the smaller companies, but we're starting to see it with the larger companies now. To be honest with you, there are a few companies that I've worked with in the past that are really, really good at letting the gray things go. And what I mean by gray things is you have your covereds and your not covereds. It should be just a straight line on your coverage. You either bought it or you didn't. And there are some of those in-between things, like my cousin came over and dropped a bowling ball down my steps and it punched a hole through my wall and outside, and now it's $8,000 to fix. Is that covered? Is that not covered? Well, it's not really talked about, and they could deny it because there is a fight that they could say, nope, it was on purpose, negligent, sue your cousin. But a lot of the good companies will create more of a customer satisfaction by saying, you know what? We get it. It happens. It was by mistake. And they won't fault on it's your cousin's fault. Go sue them. They'll say, no, we'll take care of it. Now, that doesn't mean that the insurance company won't go sue your cousin. So make sure that your cousin has the right insurance in case they want to recoup their money back. Question 12 is, how do insurance companies handle the renewal process? Most insurance companies don't do anything. That's actually a lie because they have to do something 3 weeks in advance. So the law is in most states that 2 to 3 weeks in advance, they have to send you a new policy. If you're on paperless and electronic signatures, make sure you're getting the emails from that company. In our state, Michigan, you have to sign a renewal every 6 to 12 months if you have certain coverages. So in that case, if you don't sign them, now all of a sudden the bill goes up and you don't know why. Most of it's fixable. In most cases, everybody's on the paperless version. So just make sure you're getting those renewals. They give you time to review them. And if you have questions, you can go back to the company or the agent and discuss it. Now, if you're working with the multiple agents, like if you do the quote below, you fill it out, you love the guy or you love me and you go with us, and that's the case, right? That happens. It's still going to be the same process, but what a lot of agents will do is they'll kind of set triggers. So for us, we're working on setting a trigger that if your bill goes up over 10%, it's going to tell us to give you a call. Or maybe you didn't notice it, but it went over 10%. Maybe that agency has put into place where they're now going to reach out to you and say, hey, here's what happened. We found out why. Should we shop it or whatever the case is? It's a lot of manpower. We personally want to actually call all of our customers on renewal so that we kind of create the relationship with them. It's a little bit tough because it's a 50-50. Half the time the customers don't want to be contacted and the other half, they just want to know what's going on. But overall, that's the renewal process. Most people are out on auto pay. It just continues after that. So if you don't notice the bill has changed or if it stayed the same, it doesn't matter. It'll just renew at that amount as long as the company is renewing you. Now, before I give you the 2 most powerful videos that you're going to want to watch, this is a lot. Let me know in the comments below if you got some help and advice out of this. Let's go into the 13th piece, which is how to handle increasing and decreasing coverage during the policy term. This is something that you are in charge of. An insurance company doesn't have the ability or shouldn't have the ability to change your coverage. That being said, I have come across several agents that have changed the coverage on customers without the customer's approval. That's illegal. They can't do that. So if that's happening, the commissioner needs to be involved, or there's a website you can go that can put in fraud, and you put in the agent and they'll reach out to them. On the home, it's a little bit different because remember, that home is built off of the replacement cost. So if the replacement cost of the house went up and your insurance company decided to recalculate that, they're either going to raise or decrease the value of your home on the replacement level. That can affect the home price without your knowledge. Now, you still have to get that renewal paperwork and you have to verify it as well, but it will renew at a higher amount if you just let it renew. The auto is a lot different, but like we said, the price could change, but it shouldn't be based off the coverage. So if that's the case, there's something else going on with that agency or that company that I would be a little bit leery of. So the last thing that you should check out if you're new to insurance and you're looking to know more about the Insurance 101s, I'll link the Auto Insurance 101. Unfortunately, you're gonna have to go to my channel and search if you want the Home Insurance 101. Go over the coverages, the A, B, C, Ds, and all of that of the insurance. If you want to know more about discounts, here's a handful of discounts that are most common that most people are qualified for. Go ahead and check them out. Otherwise, I'm Mark with Think Insurance. I'll see you in the next one.